It's an amazing time. I mean, since I was with you a few weeks ago, we have more people entering. I keep waiting to find out that McDonald's or Starbucks is coming out with a streaming service.
Well, AMC is making an offering where you could just buy a movie or rent a movie one-off, no subscription needed. Is that something Netflix should explore as opposed to having to commit to a subscription?
No, having spent the first 2 or 3 years of Netflix where it was rent a movie when you want a movie and seeing how dismally that failed, I would imagine that Netflix is probably going to stay pretty far away from that one.
When you look at other, large, very successful tech companies, a lot of the reporting, for example, on Jeff Bezos and Amazon, they struggle once they get to a certain point to instill the company with that entrepreneurial, we're up against the world, we're doing big things type of an attitude. It would seem the competition coming along right now for Netflix helps in that regard for Reed Hastings, right? You can sort of say, look, we really still have a lot to prove.
Yeah, I think Netflix really has never suffered from the complacency syndrome, and I believe that's probably still true today. I think one of the things which is the great competitive advantages for Netflix is, in fact, it still sees itself as a small company, as a startup that has to stay nimble, that has to push decision-making down. I mean, I think they're prepared to really go whatever direction the market is to ensure that they stay on top.
How do you think Reed Hastings thinks about quarterly earnings, the amount of focus people like us give on the minutiae of subscriber numbers, and do you think those types of things concern him and the share price pullback over the last 3 months concern him?
So to be honest, I don't know. When I talk to Reed, we try and stay away from share price issues. But I would believe that Reed probably is prepared to not necessarily run the company for quarterly earnings. I mean, of course, it's a piece of it, but that gets you into trouble, especially in a business like this, where you always have to be willing to do things which sacrifice your short term in order to ensure your long term is healthy. And doing quarterly earnings management and using that to run your business is a dangerous thing, and I'm pretty sure that Reed recognizes that.
We know that content is king and it's expensive, but when you have to balance that with perhaps looking at pricing as all these other competitors come in, do you think Netflix is priced right to be able to retain the dollars that they need to buy the content, but also make sure it's an attractive value for consumers?
So as you know, I haven't worked for the company for 15 plus years, so I'm really not fluent with their strategy or their tactics. But the way I look at it, at least from a consumer, is that there's room for lots of services. These prices at the $10 range, at the $5 range even, seem very reasonable for a consumer to have multiples. So I think Netflix has been operating in that $10-ish range for a long time, and I don't see anything really changing.